Welcome to Systemize Your Success. Today, I'm joined by Tom Griffiths. Tom is the founder of Synergy CFO Solutions. He's got over 10 years of experience working in finances with JP Morgan, and now he calls himself the CFO for small businesses. So the question is this: how do entrepreneurs like us who don't have an endless supply of cash, how do we leverage the best apps, virtual assistants, automation tools, and systems to scale our businesses, increase our profits, and have more time to do what we love to do each day? That is the question, and this podcast will give you the answer. My name's Dr. Steve Day, and this is Systemize Your Success. I'm excited about speaking with you, Tom, because I'm sure I've got a lot to learn. I'll probably walk away here, hopefully a richer man than I started. So welcome, Tom, and welcome to the show.
Pleasure to be here. Thanks, Steve.
Cool. So I'd like to kick off, just give us a few-minute intro into, what was it that drove you to create the business you have? And what's your vision for this? What's you feel your purpose and the impact that you're making through your work?
Yeah, thanks. So best place to start would be, obviously, my background is in finance. I worked at a big American bank for 7 years or so, left during COVID. And whilst I was kind of running my own business during that time, what I realized was happening was a lot of my, people in my network, mostly friends, were kind of reaching out to me and asking me for help with things about how to run their business from a financial perspective. Some of it quite complicated stuff about, how to buy another business, how to sell their business, how to fundraise. Others, what I would consider the basics. So how to actually make sure you're making a profit, how to manage cash flow. And what I realized over that time was that if my friends are facing these sorts of situations, it's quite likely that most business owners are too. And behind the scenes of those, the questions they would ask me in the first place, I realized that there were some quite fundamental problems with their, understanding of how a business works and what they needed to do. And so that's essentially where I channeled my focus. It's on helping business owners improve their profits and cash flow so they can keep the business healthy and have growing, successful, and profitable businesses, however they define success. And then working towards, whatever that long-term goal is, whether it's selling the business in 3 years or 5 years, working 1 day a week, or even working 5 days a week, but doing the stuff they really enjoy.
I'm smiling for those listening on the podcast to this, because your vision, if you like, the reason that you do your work, very similar to the reasons I started my business. I just came from it from an angle of systems and people coming to me and asking me, how do you get other people to do your work for you? Like, why am I always getting dragged into every problem? And all these sorts of problems which business owners face alongside their financial issues, and to drive people to actually, for all those goals you mentioned, whether it's to sell, to retire, to pass on the legacy, or just have a better lifestyle, doing stuff they love to do each day. So really interesting to see we've both approached the same ultimate problem, but from quite different angles, if you like. So that's cool.
Exactly. And I think the cause of the problem for both of our, both of our client base is the same. And that is that most business owners, they go into business because they're experts at something. So a builder starts a construction business, a plumber starts a plumbing business, a chef opens a restaurant. And what happens in that process is that often without realizing, they become a business owner. And as a business owner, you have to learn how to run a business. Otherwise, the business is going to struggle. Your craft might do well and you might, provide an excellent service to start with. But at the end of the day, if you can't keep the business healthy, if you can't produce cash flow, manage cash flow, the business will suffer. And that's one of the reasons that 50% of businesses go out of business before their 5th birthday. It's because they run out of cash and they can't look after the business properly.
Yeah, totally. Thinking about that, why other reasons, or getting a bit deeper into that, because it's something that I often have talked about in webinars about why businesses fail. So interested to hear your insights onto this and see if they match mine.
Yeah, as in, why do businesses fail?
Yeah. Like, obviously that the numbers are appalling. If you think, you pour your heart and soul into something and it's your absolute dream to set up your own business and to go it alone, so to speak, or to just build something you're passionate about, and then you end up having to throw the towel in, that's devastating.
Yeah, absolutely. And yeah, in my mind, it's actually quite simple for the cause of those business failures. It's that they run out of cash. I think the official stat is something like, and I say official because it's very hard to get official stats for small businesses, but it's about 80% of small businesses that go out of business struggle because of cash flow issues. But so 50% are going to go out of business by their fifth birthday, and 80% of those officially go out of business because of their, cash flow issues. But I think even for the other 20%, nobody's going to close down a business that's generating enough cash. People close down businesses because they don't have enough cash. Because if a business is producing enough cash, no one will close them. The amount of cash a business needs to generate in order to not go out of business is going to be higher for some than others. But at the end of the day, the business owner has to get good at generating cash in their business. That has to be the number one goal, because if it isn't, then the business owner is going to face cash flow issues, and it could run out of cash. So that's what it comes down to in my mind.
Okay. And so spinning off from that, I guess, what are the other problems that business owners face when your typical clients, when they come to you? Like, what is it that they feel they need, maybe? Or no, what do they feel they want, and what do you know they need?
Yeah, so I think they often don't really know what they want. They yeah, I guess the most common mistakes that I see is that they don't review their numbers, don't review them at all. And one of the reasons they don't review them is because they're generally not numbers people. As I mentioned, they start their business because they're experts at their craft. They're not numbers people. And like I said, they get into business, and then a year down the line, they realize, oh, I have to understand the numbers, otherwise I don't really know what's going on. So I think it all starts with not really reviewing the numbers, and then not understanding the numbers. So even if they do review them, they don't understand them. So how do you use the numbers to work out what's happening in the business so that you can see what's working and not working, so that you then know what to do next, so that you can keep the business healthy and have a growing and successful business. So I think a lot of problems start with that. It's that they have no visibility of what's really happening in the business. And so what happens when you don't really have any way of knowing what's going on in the business is that you just do what you know best. And for most business owners, they're experts at their craft. So they focus on doing more of their craft. But as a result, the business still carries on suffering because they still don't really know how it's doing. And then that leads to more problems down the road. Does that make sense?
Yeah, totally. I mean, they're probably they're obvious, but I'm interested to hear, like, what are the problems, like, other than running out of cash and therefore not being able to pay your own mortgage and things. But what are I guess, what are the warning signs that you're going down that path if you're not really aware of what's going on financially, and what should you be looking out for, other than just sorting it out and figuring it, like, do get hold of your money and your cash flow. But what are the problems down the line that we're trying to avoid? I guess that's probably what I'm asking.
Yeah. So I guess another symptom, aside from not reviewing the numbers, would be the business owner trying to spin every single plate in the business. And often when we don't really know how to fix a problem, we just think, oh, I'll just keep busy. And if I keep busy, then that's going to solve some problems, isn't it? And so the business owners start trying to spin all the plates, but actually the underlying cause of the problem hasn't been addressed. So every month could be a struggle to make payroll, using money that you've just received from a client to pay for another client's materials or upfront costs that you need to make because you haven't quite managed the cash flow properly. But by staying busy, we can kind of gloss over those underlying problems and make it seem to us like we're moving the business forward and doing the right thing. So spinning too many plates, not addressing the underlying cause of the problems, not really knowing how to find out what the root cause of the problems is. And then that causes stress, overwhelm. And then at the end of the day, the craft of the business owner suffers, and they basically get 2 years down the line or 3 years down the line, and they just hate what they're doing. So one of my clients, he doesn't mind me mentioning his name, Reese, he said to me, when I first started working with him, he sort of said, I've been doing this for 3 years now, and I've been paying myself the bare minimum that time because we've got too much cash coming in and going out, and I just don't really know how much I can take out. I've got very little to show for all this hard work because the business isn't worth anything. It's entirely reliant on me. I haven't been able to take my family on holiday, and I could have just got a job instead during this time. It would have been less stressful, less risky, and I would have been able to switch off on the weekends and have a nice time with my family. So yeah, that's a good example.
Yeah, and sadly, I can massively relate and resonate with that story because that's exactly what my story was like. And I spent 15 years in property working completely by myself. I'd had people to help me out with odd jobs and things, but it was me running the business and doing everything and not having any idea of my cash flow. And what's the expression? Borrowing from Peter to pay Paul. And it was just like, so the deposit. This is terrible that I did this back in the days, but it's like the deposits would come in from one tenant just in time to pay back the deposits from the other one, but I tried to find out where all the money had gone. And it was that sort of thing that I lived through this constant cycle of, am I going to be able to pay mortgages? Am I going to be able to pay? I had loads of cash in the bank. I was like, great, I got shopping. I was young and a bit foolish. I got shopping and buy something. And then you realize actually that was because the money hadn't left the account yet. I mean, it's so obvious and, naive of me looking back. But at the time, it just seemed that was okay. I was just getting, like you say, getting my head down, grafting harder, figuring it out, just basically winging it.
Yeah.
And even in this business, when I was a doctor for a number of years and went back into business afterwards. And I don't think I paid myself a decent salary in any which way, if anything, for 5, 6 years, something like that. No, probably 5 years. And thought that was okay. And it was only when actually my properties became unprofitable because the interest rates went so high recently, as everyone knows. And so therefore I had to go, okay, well, I can't live off those anymore. Now I've got to look at my own business. And thankfully there was money there. I just hadn't actually really looked at it. So I completely understand that. And it's so like me, I'm a numbers guy. I love numbers. I did a maths-based degree, I did a computing degree, but just when it came down to my own business, it was almost like I was just blind to it. I just wasn't prepared to look at it. I guess I was scared of what I was going to find.
Yeah.
So I totally get it.
Yeah, and the examples that you just mentioned, they're very, very common. And I'm not going to mention the client's name this time, just in case. But another client, they run sports hospitality events, and so they run golf events, and they also do hospitality at Wimbledon and things like that. And they said to me the other day, "Oh, well, we just got paid 50 grand for an event that we're running in December, so we can use that to pay for the Wimbledon tickets that we need to pay the balance for." And I'm like, "Hold on, what happened to the money that you got paid for the client in the first place to cover the Wimbledon tickets?" And they're like, "Oh no, we spent that on last year's VAT bill." I'm like, "Okay." So robbing Peter to pay Paul is a very common strategy or strategy. It's not uncommon. So yes,
Almost a lack of strategy. Yeah.
yeah. So step number one is very often to put a simple system in place, not getting confused and bogged down by accounting software and having to understand how to navigate that, understanding the difference between income statement and balance sheet. Don't bother with any of that. Let's just keep it simple. And I like to set up a very simple system. It's called Profit First. You may have heard of it.
I can't say his
just
Michael. You can say his surname for me.
yeah, I can't say his surname. Michael M.
I'm Michael. Yeah.
Yeah. So just setting up different bank accounts and labeling every pound or dollar that comes into the business bank account and putting it into the right one so that you don't rob Peter to pay Paul.
Yeah.
And you can keep the money siphoned or reserved for what it's designed for. And then you can also build a reserve fund as well, so that if something bad does happen, and you do need to dip into that, then you're okay. So you have what I call yellow flags instead of red flags, because if you have one bank account and the money runs out in the bank account, then it's game over. Whereas if you've got a few different bank accounts and everything's kind of in the right place, then one account runs out of money, you can dip into another one, and it's a yellow flag. It's time to assess what's going on and trying to reverse it. So anyone can understand how much cash is in their bank account. So that's a nice simple system that I like to help my clients implement to get started if they're having trouble with staying on top of the cash flow.
Yeah, I mean, if you're listening to this now and you haven't done something similar to that, I can fully advocate that. For me, was probably the biggest game changer in me understanding where my business was at financially. And we do have accounting software, but I never look at it. That's what the accountant and the bookkeeper do. Whereas I do look at my bank accounts because obviously that's money and I understand money. And so, for me, just like literally simple things. Like actually we had real issues a little while ago. One of my someone I worked with a while ago was responsible for doing what you're talking now, divvying up the cash coming in to the allocated to certain accounts, and there was no provision for tax, there was no provision for VAT. I mean, there was no provision for paying our partners, and so it came to the end of the financial year, and the accountant was saying we're at a massive loss. We're saying no, we're not. Just total mismatch between my perception of what was going on and reality. And from that day, I did exactly what you said, and just literally money comes in each month. I get one of my assistants to tell me how much VAT I need to put into an account, and then the accountant sorts out the real numbers, and then I just take it out. And actually doing things like that and I was putting the maximum it'll be, because then at the end of the quarter, there's always a little pocket I can put back into my cash reserve, and or into a profit, whatever you talk about. So yeah, I think that for me, brilliant advice, and it's so simple to do.
Yeah, it is. Well, it sounds like you're on top of it.
Well, that one, yeah, but that's probably. So how can companies, small businesses, how can we improve profits and cash flow? That's the big question.
Yeah, so I think this gets overcomplicated by accountants, because a lot of the language used around numbers is to help accountants understand what's going on. So income statement, balance sheet, all this financial jargon. It was made up by accountants for accountants to understand how the business is doing. So when we talk about how much money, let's say Reese, how much money he made last year, he actually said to me, another thing he said to me was, I got to the end of the year last year and I looked at my profit and loss and it said a number, and that number was so wildly different to the amount of cash in the bank account, and I just didn't know how much money we made. And my wife said to me, how much money did you make this year? And he said, I don't know how to work it out. And so that's confusing, because your profit and loss says you made a profit of X, whereas your the actual amount of cash you've got in the bank account is entirely different. So in my mind, I always get away from the accounting jargon, and let's just focus on the basics. So what is actually driving the business? What is driving revenue, profits, and cash flow? And it's the same for any business, whether it's Uber or Amazon, or my business or your business, or a one-person dental practice on a high street. It's exactly the same. And so we break them down into 16 drivers. I think there are five revenue drivers, 4 profit drivers, and then the rest are cash flow drivers. Nothing complicated, but it's exactly the same for every business. So it's a case of getting clear on what those 16 drivers are for your business, because they're going to be slightly different for your business versus mine versus Uber, quite different for Uber. And then it's working out which of those drivers we can improve every month or focus on improving, so that they're going to have the biggest impact on revenue, profits, and cash flow. And then what we do is, by focusing on the drivers that are going to have the biggest impact on revenue, profits, and cash flow every month, we remain focused on the most important drivers of the business, and we can stay focused on the business instead of getting stuck in the weeds. Because if we can set, for example, let's say I'll use your business as an example. Let's say you have, we go through the 16 drivers and we work out that actually the number one place that you're, losing revenue is that you're losing clients every month. So we can say, right, your objective for the next 30 days is to improve your retention rate. And so, okay, how are we going to improve your retention rate? Let's set 3 clear next steps, so that for the next 30 days, you're pretty much focused just on those 3 steps. And that way, every day when you look at your to-do list, you can stay, right, though, whatever I do today, it all has to basically center around those 3 things. And yeah, you have to get your day-to-day done as well. But by focusing on the main or the most important things, you can try and avoid getting stuck in or sucked into the stuff that you just don't need to be doing.
I love this. It's so in line with the way that I think and help my clients, but again, coming up from a slightly different angle. But the idea of daily goals or weekly goals, and then also for the company, not just personal goals, but if your goals are, like the example you said, to retain clients, then how are you sharing that goal with the rest of your team, and what are they doing to help that as well? And I know from talking to my clients, just into more general rather than specific, like I love this idea, because it's actually driving, ultimately businesses are there to make money. Yes, they can make an impact, and yes, they can change lives, and yes, they can give you a lifestyle. But if they don't make money, they aren't a business. That's fundamental for me. So I get this.
Yeah.
And what I love is that this model is looking at the business from that angle, but then seeing, okay, so what do I need to do practically to make that into a reality, as in to make the business profitable? So I love it. Yeah, great.
Yeah, and to your point there, whatever the business owner's goal, like I mentioned a few examples earlier, selling the business in 3 years, working 1 day a week, working 3 hours a week, working 5 days a week, but on the stuff they love, whatever it is, the way you're going to achieve it is by generating sufficient cash flow and profits in the business so that you can achieve that goal. And so that has to be the only focus. If we know that cash flow and profits are what we need to keep the business healthy, and we know that cash flow and profits are what we need to avoid failure, and cash flow and profits are what we need to achieve that long-term goal, that has to be the only focus of the business owner. Everything else is a distraction.
Yeah, that's probably a hard lesson for many people to hear. But
yeah.
it's ultimately true. Yeah, I mean, what my vision that I share with my clients is that we help people to live with purpose, prosperity, and freedom. And the prosperity is actually key to that, because it's very difficult to have freedom if you aren't prosperous. And purpose, hopefully, is the driver towards your prosperity. So that is the one thing that keeps you motivated. So yeah, I love this. It's totally in line with how I think. So
right.
Cool. How then? Now we've nailed down, you've got drivers, we need to identify, we need to put in action steps to actually make those things happen and not just talk about them. How do we then actually keep more money from the business? So the business becoming profitable, but as a business owner, how do we avoid doing what I did and so many business owners do, which is basically becoming a slave to your own business and thinking that's acceptable? But how do we actually put money in the bank and enjoy life?
Yeah. So I think it's a case of working out where the money's going. So like back to that profit first example, we can work out the three main numbers: how much we make, how much we spend, and how much of it we're keeping. Okay. So if the problem is that you're not making enough, then obviously the focus has to be on making more. So that's revenue. If the focus is you're making money, but you're not keeping it, then let's focus on like spending less and then having a simple system around that. So for example, the way that Profit First teaches is to pay yourself first every month. And that's not a new concept. He talks about it in Rich Dad, Poor Dad. It's called the envelope method as well. Richest Man in Babylon, they talk about it as well. But essentially paying yourself first. So getting into the habit of checking your bank account every Friday and siphoning off an amount of money and putting it into a different bank account. And what happens is that you're basically forced to run the business off less money. So if you have $100 in a bank account, you're going to spend that $100 on running the business. If you have $50 left over, you're going to find something to spend that $50 on, thinking using it as an excuse that it's going to produce a positive ROI for the business. Whether it does or not is another story. Whereas if there's only $30 left, then yeah, you'll spend that $30, but you've already siphoned off the amount that you need to build up your kind of profit account and the amount that you can take out of the business to have the life that you want. So I think it's, to answer your question, it's a case of working out what the root cause of the problem is. Like, why are you not taking money out of the business now? Working out whether it's a problem with the amount you're making, spending, or keeping, and then setting up a system so that you can manage that, and understanding where your current kind of weaknesses are when it comes to managing cash flow, managing the money, and making it so that you can't break it, basically.
I like it. I will hold my hands up to say that I try and do that because I have read Profit First, but don't always do it. And so this is a very stark reminder, or a good reminder, to actually start doing that again consistently. But there you go. I always like to be honest about what's working and what's not. And talk about what's working, what's not. How do we know what's working, what's not in our businesses? Like, so we've got profit, we've stuck it in the bank now, but is this really going back to our drivers, or is there more to it that knowing like what do we need to do more or less of, or like how do you see this?
Yeah, so as a framework, that's it. It's the 16 drivers.
Yeah.
So what we want to do is we want to first understand what's happened. So we look at the numbers for the last month, we compare them to other numbers that are going to be useful to compare them to, say the same period last month, year to date. And then we want to work out what's not working and not working in the business. And then we want to set out next steps. So it's the process that I followed earlier, right? So to start with, we're going to look at what's happened, and we're going to put what's happened into the 16 drivers of the business. Okay, so based on the 16 drivers, we can then see what is working and what is not working. Okay, because we're going to compare the actual numbers, let's say lead generation, conversion rate into clients, retention rate, upsell rate, cost of goods sold as a percentage of sales, payroll as a percentage of sales, and we're going to compare those numbers to the prior numbers. Okay, and then we're going to compare them to targets. And the targets are set so that if those numbers are achieved, then it's going to mean that you're on track to achieving your long-term goal. Okay, and that's how we can see what's working and what's not working in the business from the numbers. Okay, and so let's say our retention rate drops and we're losing clients. Well, we can see that that's the problem. Okay, so then it's a case of kind of opening up the imagination a bit and thinking about why that's happening. So what has actually happened in the business to cause that retention rate to drop? And there's not a black and white answer like there is with the numbers. This requires a bit more thinking and a bit more thought. And then it's a case of looking at that information and thinking, right, this is what happened. This is what's happening. What do we need to do to improve that? Given that we know that's the cause and that's the number we need to improve in order to get back on track.
Cool.
Yeah. And so something I haven't mentioned is the targets. So let's say the goal is to sell the business in 3 years, or any of those examples that I gave. Sell the business, work 1 day a week, whatever it is. In order to do that, we need to achieve a certain amount of cash flow and profits. Okay, so I'll make the numbers up. Let's say we want to sell the business for $1 million in 5 years. In order to do that, it's a business that operates in an industry where typically a business of that size will go for about 3 or 4 times profits or adjusted EBITDA or cash flow. So let's say you need to be making 250,000 in EBITDA cash flow at the end of the year. We need to generate 250K by year, usually about year 3 or 4, so that the valuation in year 5 is going to be equal to about 3 or 4 times cash flow. Okay, so if we know that we need to get to 250K by year 4, we reverse engineer that to today into like gradual increments of what we need to do. And then we break down those goals into the 16 drivers. And that way we can see, in order to hit that 250K target, we need to generate X number of leads with X conversion rate, with X retention rate, with X upsell rate. And we take the current numbers of the business and then basically draw a straight line between them and then work out what we need to do each month in order to get there. And so we reverse engineer where we want to go back to where we are now. And that's how we see a path forward.
Yeah, I love it.
Yeah. And then back to what I said before, every month we look at what's happened over the last month, we break it into the 16 drivers, and then we compare where we are to where we want to be with the target. And then that's how we can see kind of what needs to be worked on, what needs to be improved.
Yeah, I love this. I'm a very visual person. And so this idea of actually mapping out the end goal and where I want to get there. And I look at it from terms of like freedom and also they might be working in the business for the own business, etc. But ultimately it's the same. It's just looking at a different aspect of the business. But I love this because I love the way you described it, because it's, for me, that idea of being able to see what achievements you're making towards your goal make you then more motivated to continue towards it. Rather than just having this pie in the sky dream or ballpark figure that you just throw up there, but then have no idea how you're going to get there. And I did this in the early days, and I'm reading Gina Whitman Traction and using their vision traction organizer to create their 10-year plan, my 5-year goals, whatever it is. I can't remember the names now. And it looked amazing. I was like, oh, we're going to be rich millionaires this time, Rodney. And actually what happens is next year, it looks exactly the same, because you just move it by a year and you're not actually generally progressed anywhere. You don't know how far you've come. And that's the key. And that's what I think I really like about this, is it's something that's measurable and something that actually isn't moving, and but putting a fixed stake in the sand, or line in the sand, sorry, and saying that's where we're going to go. And I think that's one of the things that, I love it so much, is because one of the things I know myself and so many business owners suffer from is the movable goal syndrome, is that we never reach our goals because we keep moving the goalpost. And so actually by documenting it and putting some figures behind it, you can't do it so easily. So
Yeah,
yeah.
exactly.
And then one thing just came to mind when you're talking about this, about the drivers and the figures um and the measurables to be able to see your progress forward. Something that comes up quite often in our masterminds is about KPIs and KRAs or OKRs or whatever you want to call them. Basically, the measurable goals that we're working towards as a team or as an individual. And so, one of the things that comes up, what should they be? And just interested to hear how you translate these financial figures into the work-based, practical, tangible KPIs or whichever acronym you want to use to describe similar sort of concept of how do I know myself or my staff are doing the right things consistently? Do you have do you directly translate those in? Are they the key drivers of all work within the business? Is that how it works?
So the 16 drivers that I mentioned,
Yeah.
that's what I use. So the 16 drivers, you can then break them down depending on the business into more drivers. So for example, like leads generated, for example, you can break that down into a lead and then a sales call and then a person showing up to a sales call and then a sales call to call closed. But fundamentally the driver is the lead or lead generated.
Yeah.
So that's what we would do to kind of go a level deeper than the 16 drivers and really dive into what the root cause of the drivers is. The main four, which I would, if you're not tracking, I would start tracking. Are revenue, gross profit, net profit, and cash. And if you're not tracking anything at the moment, then just start with that: revenue, gross profit, net profit, cash. And I would start with every couple of weeks or every month at the least. Just log into your accounting software. Again, some business owners don't like doing this. Log into your accounting software, just look at what those numbers are and track them over time. So month on month, are those numbers improving? Revenue is what you make. Profit is, or gross profit is what you spend minus the cost of delivering the service. Net profit is minus all your other expenses, and then cash is obviously cash. So I would just start with that. And if you can get into the habit of putting money that isn't yours into another account so that you don't spend it, then do that as well. Because then that cash number is going to be reflective of how much cash is actually yours and how much money you've actually made in the month.
Oh, I see what you mean. So the cash balance in your personal cash account as opposed to just the loose cash floating around in the business.
So keep business and personal separate, definitely. I'm talking about the business cash.
Sorry, I mean the business. Yeah.
Yeah. So what I'm saying is, let's say you get paid by a client for something that's happening in a month, but you know you're going to have to spend half of that money to pay for upfront costs associated with that thing that you're doing for them. Just put that amount, that 50%, into another bank account so you don't spend it.
Yeah. Yeah.
And then you know that the 50% you keep in the main bank account is your cash.
Yeah.
Although you do have to pay tax, but still, you get the idea.
I do. No. No, it's what we do. I try to do, as I said, do it consistent every month, but pretty much try and do exactly that. So I do understand what you mean. Fantastic, Tom. I think that what you just given is a great summary and a great place for us to draw this to a close. But I do have a few quick questions to ask you, if I may. So I always like to ask people what your favorite apps or software, things that help with productivity systems, or just stuff you enjoy using within your business.
I do everything on Notion, just for logging, taking notes, managing projects with people in my team. You can have a team space set up in Notion. I love using that. Everything's in one place that way. So that's the main tool I use. The stuff that I use to help my clients with, the 16 drivers, I've got a very, it's not that fancy, but it's a spreadsheet that I use. So all of my work with my clients is on a spreadsheet, pretty much the same template. And that's pretty much it. Zoom I'm on most of the day. Other than that, there's nothing too fancy.
Keep it simple. I like it.
Yeah.
Cool. And who else do you think would be a great guest on this podcast?
Who else would be a great guest? I would say if you get, do you mean the name of a person or
No,
a?
yeah, anyone you know or think would be an interesting person that you think would be good to have a chat with on here.
Yeah, so I would say, have you met Graham Stephen?
No.
He focuses on business valuation.
Mm.
And so I would say that's a nice follow on from the conversation we've had, because he talks about, he runs, it's like a software that helps business owners value their business. And it feeds into what I do, because often I'll do a business valuation with my clients when I first start working with them. And then I'll, use that to help them see where they're trying to go. And that can be a really useful way to see it.
Cool. Do you know Graham?
Yeah.
If you introduce me, I'll get him on. Sounds
I
like
will. Yeah.
Yeah, cool. Title of this podcast is Systemize Your Success, but what does success mean to you?
Success means to me, obviously that means something completely different to everyone. For me, it's running a successful business which has a positive impact on the world, that I can run on my own terms. So that means choosing when and where I work and being able to pay my bills.
I like it. Good. Fantastic. Tom, if people want to find out more about how you can help them or just learn a bit more about what you do, what's the best place for them to come and search you out?
Yeah, so Synergy CFO Solutions, synergycfosolutions.co is my website. On there, you can find a link to, see more about what I do, book a call. And then if you want the 16 drivers that I've talked about, I do have a free report that I can give you. So it's Synergy CFO Solutions /16 drivers. And there might be a link somewhere around this podcast that you can click on to download that.
There will be. We'll put it onto the show notes on the podcast page, so you'll be able to find it.
Perfect.
Cool. Tom, it's been a pleasure. Thank you so much for coming on.
Thank you for having me, Steve. Pleasure to be here.
Awesome. Speak to you again soon. Thanks very much.
Speak soon.